Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you understand the level of risk in the stock market through our proprietary market risk signals that are emailed to you every weekend as part of our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Monday, May 18th, 2020. For this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. Today we were up 3.15% on the S&P 500 and closed at 2953.91. This first chart is a 15-day, 15-minute chart of the S&P 500. So each candlestick represents 15 minutes of trading. And what we can see here is where we closed on Friday, and we had a huge gap up this morning on some positive headlines. And then the market just kind of went crazy and traded up from there. Again, finishing up 3.15%. Now, a couple of things here, guys. These types of days, when you're up over 3% on a major index like the S&P 500, these types of days are most always associated with a bearish market environment. And again, what really changed over the weekend? Fed Chair Powell was on 60 Minutes and had some positive comments. We had a phase one trial with, I understand, 8 people that had some positive results with respect to the possibility of a coronavirus vaccine. But keep in mind, this is a phase one trial, and it was 8 people, is my understanding. So all of this optimism, which is great, is based on headlines. And you can see here, after we gapped up at the open, the market continued to trade higher for most of the day and then sold off for the last 15 minutes of the day, but not a big deal there. And again, finished up above 2950, which, by the way, we'll look at that on another chart. But first time we've closed above 2950 in quite a while. This 2955 line, the reason I have this in here is that is the highs that we touched back on April 29th, which was 14 trading sessions ago, and I had that line already on this chart, and so today we got up above that. We hit our head on that line for a good portion of the day and then finally punched through it, traded above that 29.55 for most of the afternoon, and then during the last 15 minutes of trading, sold off and closed beneath that, but still closing at 2953.91. Now what we're looking at is the year-to-date chart of the S&P 500, where each candlestick represents one day of trading, and you can see here that this is the first day that we've closed above 2950 since clearback on March 6th, so that definitely is a positive. Another thing to see on the daily charts here is that this is the first time we've had 3 positive days in a row since clearback at the end of March, where we had 3 positive days in a row. And you can see as we go through all of the daily closes since the end of March, this is the first time that we've had 3 days in a row where we've closed positive since clearback towards the end of March. So again, all of this is very positive. First time we've closed above this 61.8% retracement level, that's a positive. First time we've closed above 2950 since March 6th, that's a positive. If these markets are going to continue to head higher from here, we will want to see follow through on today's action. We will want to see the market continue to close above this 29.35 to 29.50 level going forward, if this rally is for real. This next chart that we're looking at is a 5-year monthly chart of the S&P 500. So each candlestick represents 1 month of trading, and the blue line is set at 2950. Of course, we closed at 2953.91 today. The importance of the monthly chart with respect to the 2950 line is that we've only had, in the history of the S&P 500, we've only had 7 months where the S&P 500 has closed above 2950. So we are in rarefied air here, and keeping in mind that earnings for 2020 and maybe 2021 are going to be lower than what they were in 2019. And again, the first time we ever closed above 2950 was back in the summer of 2019. So if these markets are going to continue to push above 2950, we're doing this with much higher price to earnings ratios than what we've seen in a long time. So just understand that there's still a tremendous amount of risk in these markets, okay? So, but let's just count these. So there's the first time on a monthly basis we closed above 29.50. So there's 1, 2, 3, 4, 5, 6. And this candlestick, it's really hard to tell, but we barely closed above 29.50 right here. I had to look that up. So we've got 1, 2, 3, 4, 5, 6, 7 months in the history of the S&P 500 where we've closed above 29.50. So we are asking a lot of these markets if we're going to continue to close above 29.50 on a go-forward basis, based on unemployment figures, based on earnings, based on lack of certainty, based on just the myriad of things that could happen. So just understand that, those are the realities. We're back to some levels that we first achieved less than a year ago, and we're doing this on lower and lower earnings. So just understand that these markets are still extremely risky and perhaps even more dangerous at these levels than they were when we were several hundred points below where we are right now. I hope you've enjoyed today's session. Please remember to subscribe to this channel, give me a thumbs up on this video, and check out some of my other educational videos. I have a lot of great market-related videos on this channel. Also, if you are a financial advisor or an individual investor that manages any of your own money, including in your 401k, your 403b, your IRAs, or of course your trading account, I would encourage you to take a serious look at Simple Market Signals, which is my personal risk management model that I have now made available to the public. For those of you who would like to learn more about how Simple Market Signals can help you in both up and down markets, here's some additional information. As part of the Simple Market Signals model, there are two powerful indicators. There's a risk-based indicator and a trend indicator. As a subscriber to Simple Market Signals, you will receive information on what the risk level is in the overall stock market, as well as what the trend direction is in the overall stock market. So this really, really helps. The way we disseminate the signals to our subscribers is via our weekly emailed newsletter. So within the newsletter, every weekend, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the early bird indicator, the trend direction signal on the overall U.S. stock market. You will have market and sector performance information on multiple time frames. You'll get market commentary and a weekly recap of what happened in the market. You'll have technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information in this newsletter every weekend. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents a day. It's billed monthly on your credit card. There's no contracts. You can cancel anytime, and your first 2 weeks are free. Now let's recap what you get with your subscription to Simple Market Signals. You get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there is a major signal change or direction change, we're not going to wait until the weekend to get that information to you. We will send out a special midweek update when necessary to keep you up to date as to what's going on within the model. And the best fit for a subscriber for Simple Market Signals is somebody that has at least a 6 to 8 week time frame or longer. So if you're a long-term investor, you're going to love this. If you have at least a 6 to 8 week time frame that you focus on with your trading and investing, you're going to love this. If you're an ultra short-term 1 or 2 day trader, kind of a day trader, or somebody that trades within a week, Simple Market Signals might help you a little bit. But the reality is, the people that are going to benefit the most from a subscription to Simple Market Signals are those people that have at least a 6 to 8 week plus time frame that they're focusing on. And if you want even more information on Simple Market Signals and some of the strategies that you can use on the various signals, this is a very in-depth video that I will have linked in the description box below this video, along with a bunch of other videos that you may want to explore if you need additional information on Simple Market Signals before you subscribe. Also, keep in mind that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. And to subscribe to Simple Market Signals, all you have to do is go out to the website that you see here, https://simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that simple.